Hello and welcome to The Big Fight, and this is a special show. It's a show that we do every year around Diwali time. So in the month of November, we do a show where we get a panel of experts and we ask them a really big question. If you have money, where should you invest it for the coming year? Or more accurately, what should you do with it for a coming year? And we have a range of possible options of what you should do if you have money. And of course, this is also slightly predicated on the fact that you do have the money in the first place. But assuming you've got some money lying around, what do you do with it? Buy equity with it, put the money into a mutual fund, or buy stocks and shares with it and allow it to grow. Put your money into fixed deposits and bonds. That's another possible option. Option 2. Option 3, real estate. Buy a house. Is that what you should be doing? Buying a house with it or real estate. Or should you invest it in gold and jewelry? That's another possible option that many people consider as a possible area of what you should do with it. Well, then you have a certain option. There's a lot of instability about to come. Just keep the money in cash, put it under the mattress, or hey, have some fun and blow it up. So there's a range of options that we often look at year after year in what has become a big fight tradition. So here we are on the 2018 version of this particular exercise. Again, we've got a great panel of experts for you. But this year, there is something else that is special. And I'm going to spend some time looking at it. This is not going to be a normal year because you're going to have the general election. Does that influence the way we should be thinking? So, for example, should we not say, don't take a decision from now for the entire year, take a certain decision from now till the elections, and then based on what happens in the elections, perhaps we should rethink. Might be a safe thing to do, but I'm going to get all my experts to weigh in on that. And let me just welcome all of our guests. We've got with us Ramesh Damani, one of the top voices in the Indian stock market. It's always a pleasure and a privilege to have you with us. Also joining us from Mumbai, Suresh Sadagopan, who's founder of the Ladder 7 Financial Services. Nasser, Salim is with us, investment manager, Flexi Capital, will advise a lot of people on what they should do with their money. So perhaps the right person to tell us about this. For real estate, who better to get than Rajeev Talwar, who's CEO and a whole-time director at DLF Limited. So it's always it's great to have you with us. Also president of the PHG Chambers of Commerce and Industry. Maybe you can give us a slightly broader view on that as well. Gold and gems and jewelry. Well, again, who better to get than Nitin Khandelwal, who is the chairman of the All India Gems and Jewelry Trade Federation. There is going to be a lot which will be said today on politics and how that could affect the economy and which way are things going to move. So Sunil Alag, independent business consultant, also does have a very keen sense of what's happening politically on the ground. So Sunil, thank you so much for joining us. We're going to get other expert opinions also as we roll on. Okay, with that long preface out of the way, let me start off by asking you the basic question. Why don't you go first?
Sure.
Where do you keep your money for the next 1 year?
Well, Vikram, very interesting again, considering where we are at the moment. Clearly, my money is diversified. I've got liquid funds, I've got monies in fixed deposits, I've got some money in gold, I've hedged my bets in equities. So, it's a very well diversified portfolio. But having said that, I think currently where we are, we need to be a little cautiously optimistic, Vikram, because, we are going to be hit with certain headwinds coming our way. We can look at the election here, which is going to be a game changer as far as the equity markets are concerned. I think when
game changer in either direction.
Either direction, absolutely. Down. I mean, you could actually see levels coming off to as low as 20% from here, or you could see levels going upwards to about 25% from here. So, one doesn't know which way it's going to.
Just say 20% down from here.
Yes, absolutely.
Or 20% up from here.
Absolutely.
So 20. Let me do my math very quickly.
So
you are saying that the Sensex could go all the way down to 28,000.
28 to about 30,000. And I could
or could go up to more than 40,000.
Yes. And this is, by the way, historically been the case. If you see, especially when there's a lot of pessimism that sets in, Vikram. My second point is that obviously in this kind of a scenario, when pessimism comes in, the first question that everybody needs to ask is, what do I do? The fundamental principle of investing is you buy low and you sell high.
So be prepared to do that.
Absolutely.
Okay, I'm going to come back to you first for details and ideas and suggestions on this. But that's an interesting point. Perhaps one of the first things that you said is keep it diversified. And maybe this year, that's not bad advice because there is a lot of uncertainty coming. So maybe hedge your bets, I think is what he's trying to say. Hedge your bets. Keep lots and lots of fingers and lots of pies. Don't do one thing because this may not be a normal year. Suresh Sadagopan, let me get you in on this. What would your take be? Where should we invest our money for this coming year?
Asset allocation at every point in time is very, very important to have. It's not just at this point in time that asset allocation becomes important. What one should invest is not a factor of what is going to happen in the next 6 months or 1 year. We all have long-term, medium-term, short-term goals, and we need to invest according to what kind of goals are going to come up at what point in time. So liquidity requirements, the return risk reward requirements, so all those things we'll have to see.
Can I just pause you, Suresh? Let me just pause you and try and understand a little further, because again what you have said is something that our viewers would be well advised to think about a little bit. So you're saying, what could you need the money for? And the reason it's important, and correct me if what I'm saying is wrong, in case there's a marriage coming up in your family 1 year from now, or kids are going to college, or whatever, you're retiring, you may want to be more cautious, because Nasser is right, and it could be 20% up or 20% down. Then you don't want to make sure that you're not stuck. You put all your money into equity, and if market suddenly falls. So if you need the money 1 year from now, you probably should be a little bit more cautious. If you don't really need the money and you're really building a nest egg for 5 or 6 years from now, perhaps you could take broader risks. Is that essentially what you're trying to say?
Yeah, absolutely. I mean, we need to see what are the goals that are going to come up in future. And like you said, if we have a goal, something like, say, 1 year from now, probably the entire money which is required for that goal has to be entirely in debt. And if we need something like, say, for instance, 10 years from now, I mean, we cannot keep it all in equity. We will have to see what kind of risk profile the person has and accordingly properly diversify. So that's it's very important to look at the short term and keep money dry for that particular goal. So that's very, very important.
Okay, when you're saying keep the money should be in debt, just in case for anybody watching this who's not completely financially illiterate, he's not saying take a loan if you need money 1 year from now. He's saying take some of your money right now and keep it into fixed deposits or bonds, which is called debt as opposed to equity. Sunil Alak, let me get you in on this note. What would you be doing with your money right now?
You know, when you come into a year of elections, all I say is cash is king. Try and keep your money with yourself. Move in when you see that there is an opportunity either in the stock market or there is no opportunity. Try and keep the cash ready for when you think you want to put in money, at least till the middle of the year. So it's very important right now. For instance, if I was to look at one particular industry which I'm very close to is the FMCG business. Food business you can't go wrong on. If you're putting money into stock in companies which deal with food, whether it's a Nestle, whether it's a Britannia, whether it's anyone, no matter what happens, you never see that stock ever go dramatically down or dramatically up, and it's the best hedge that you can have in a country like India, where people are bound to eat, where food is bound to grow, where the population is there, and if you have a better GDP growth, the rural market is really growing. But by and large, stay in cash, look for opportunities when you can, otherwise the money, if you have it in your hands, you're best off. That's all I want to say. Stay in cash for as long as you can. And only move your cash when you think there's an opportunity coming in, either for land, either for, you know, and I'm not a great one for gold in any case. I would say silver only for one, not in terms of wearing jewelry, but if you can put money into silver per se, it's got industrial use, and that is bound to grow. So more than gold, which we tend to hoard, nobody hoards silver. So go for silver, but try and stay in cash this year. For as long
I'm getting everyone's take on this, and then I'm going to put each and every one of these theories up, and I'm going to get everyone else is allowed to take a pot shot as to why they don't think it's the right strategy. But let's now move to real estate. One of the fine. And now, so all of this is like financial assets, which is all good. Sure. But where you are, Rajeev, that's where most Indians, in any case, intrinsically love to
invest. Because I think what they're talking about is a very, very short term. I think for your question, when you said what should we do for the next 1 year?
No, but I'm saying even long term.
Even long term, because that's what Sudesh did, I think. He talked of three kind of things, short, medium, long. And I think the biggest thing that has been is that we've had a down cycle. We've had a down cycle where there have been lots of speculation on real estate. People have had taken a hit. But today, what's the condition? That you do have some and builders all over India who've got inventory, who've finished projects, and they're ready-made apartments where there is no speculation at all. The down cycle means prices are very compelling. Therefore, if you wish to make a long-term financial and emotional investment, which will give you a nominal return, which the markets are providing right now, that yes, the financial markets as investors and investment analysts as well as funds say 12 to 13% nominally, the same kind of return will be available from property because prices are so compelling right now. And you make an investment
compelling,
straight.
Rajeev, compared to where they were maybe a year or 2 years ago.
That's it.
But it follows a substantial period where prices had gone up a lot. So the question is there still some room for them to fall? Because prices of real estate compared to the average income of an Indian is still high. It's high compared to the rest of the world.
So that's why you'll have to make a choice. That what kind of money do you have? What kind of perspective are you looking for? Are you investing merely for a year or a longer period? And therefore, if you're looking out for a stable, long-term investment, which will give you northwards of the in return, which you will get from financial instruments, there may be a spike in the financial instruments, like as Sunil said rightly, FMCG, pharma could be another one, as I would say from PhD CCI perspective. But real estate is something which did give you a very high return in the past. Fortunately, we've come on to now ease of doing business as enunciated by the government over the last 4 years. Therefore, if they stay stable and give you a stable return in the long term, it's very good not only for investment, for GDP growth, for employment, and for a stable emotional investment.
Okay, so real estate, that's the pitch for real estate, and actually Indians don't need too much of a pitch for real estate because they love buying housing to start with. The other thing which Indians don't really need to be sold or given the pitch for is gold in jewelry and gems and areas like that. Is that the right thing to buy? The flip side of what Nasser was saying, period of volatility. If there is volatility and certainly if there's a downfall, maybe gold is the area to be. So to give us that perspective, Nitin, Khandelwal, what do you think people should be investing in?
I agree with a couple of things that you should diversify your all investment. One cannot put all eggs in single basket. Just one observation. In 1990, 1 kg gold is equal to Maruti 800. In 2000, 1 kg gold is 1 Esteem. 2005, 1 kg gold is 1 Innova. In 2000, 1 kg gold is a Fortuner. 2016, BMW. And 2013, 1 kg gold, maybe you have a private jet. So this is the journey of the gold, and the emotional, physical possession of the gold is very much required for any Indian woman. She or he cannot wear a property document in her earring or in the pendant. The social security she feel when she is having the only gold in her maybe in the earring or in the bangle or in the cupboard. So physical gold 10 to 15% investment is required because
you do know, of course, Nitinji, what Warren Buffett said, that if all the gold in the world was melted into a little cube, there's nothing much which you can do with it. Gold has value because we think it's got value. There's nothing else that can be done with it. So you're aware of that particular criticism for gold, right?
It's a year on year it is proved that 10% return gold is giving. There is a fluctuation because of the currency, but the return is giving the 10% return. And in the India is estimated 24,000 tons of the gold, and we are proposing some proposal to the government for the gold monetization, so movement of the gold for the nation, the builder nation also.
Okay, fine. So we've got a broad range of views out here. Actually, I'm almost tempted to throw it out to an opinion poll and to ask all of you out there and saying which one do you think you're liking right now. Now, I'm going to get everyone to defend their particular choices over the course of the next 1 hour. And I'm about to start off with Ramesh Damani, who actually hasn't yet spoken, and get to him. But actually, before we do that, before anybody says anything, let's turn to the audience, okay? Quick, unscientific poll, show of hands. How many of you think the best thing to do with your money is to buy equity, stocks? Okay, 7, 8 hands. How many of you think the best thing to do is to keep it in cash? Okay, 1, 2 hands, 3 hands. How many of you think the best thing to do is to buy a house? Whoa, housing has it nearly, real estate. That's the clear winner at this point. How many of you would pick for gold? Okay, 4 hands. Okay, so rough, unscientific snap polling, it's housing, then equity, then gold, and then cash, which probably is the way in terms of returns it has been in India through this entire period. But let me see if I can get Ramesh Damani in to change everyone's minds as to why he thinks that actually equity would be better. Ramesh, thank you so much for being with us. Now, you're one of the most respected voices in the stock market, so I'm just going to spend 4 or 5 minutes with you, and I know you have to leave us then after that. So what do you see happening in the stock market in the coming year? And do you think that equity is the best place to invest in right now?
Thank you, Vikram. Season's greetings to all your viewers. First, Vikram, I think there's some good news for investors in the market. I think the last 2 months have been particularly brutal, with the Sensex falling some 14-15% from its high. So the question on everyone's mind has been, was that a break in the bull market, or was that the topping out of the bull market? And the evidence that we see so far suggests that it was a break in the bull market, not a topping out of the bull market. The reason I say that is the way the market is now reacting to news. Bad news is discounted, good news is being rewarded. The new highs list is again starting to fill up, maybe slowly, but it's starting to fill up again. And corporate earnings season, which is just coming to an end in the next few weeks, has generally been decent. So my feeling is that we are in a vicious correction of bull market and not at the end of the bull market, which of course means good news, which of course also means that we'll go back and test the old highs of the market sometime in the next 6 to 12 months.
Right. So you seem to be saying, Ramesh, that you think that the worst of the correction is over and that there's no really sharp slide ahead. Do you think that's the case, or is there still things that could go wrong and we may get a better buying opportunity a short while from now?
Yes, I think it's true across the market. The market is showing an enormous amount of resilience around the 10,000 Nifty levels. If you saw, for example, Indigo came out with a very bad set of numbers, and instead of stock falling, it went up 20%. Companies that come out with good results are now being rewarded by the market. New highs again are populating the list. All these are good signs to augur that the bull market was continuing rather than ending. Okay. These things don't happen at the end of a bull market. New highs don't happen if a bear market is starting, for example.
Yes, but there's one big elephant in the room, or bear in the room, if you can call it that, which is potential political instability. I mean, we do have a general election coming right now. I think that's partly what Nasser was referring to when he said 20% down. You could have an outcome in that election which leads to political instability, and markets don't like it, and then you could have a really sharp correction, maybe even a crash at that point. Is that something which you think is a real possibility?
Vikram, I've been in India since '89, and I've seen coalition governments come, coalition governments fall, the UPA come, markets down, the UPA come, markets up. So volatility and political elections are part of the beast, part of the fabric that we deal with every time. There is no reason to sell stocks because of an oncoming election. I think, as some economists rightly put it, India grows at night. With almost any government will grow at 6%, 7%. What we need is a government that will make us grow at 9%, 10%. But even if you look at 6, 7% growth, that's not shabby in a world that's growing at 1 or 2%. So I think elections will come, markets will be volatile, but there's no reason to give up looking for the great businesses that we're finding at single-digit PEs, handsome dividend yields in the current fall.
Right. Interesting point you make, and I think you're right, that if you look at India for the last 30 years, you've been growing at 6, 7%, almost irrespective of whom you've had. You've had strong governments, weak governments, coalition governments, strong prime ministers, weak prime ministers. India has kept on growing. So to that extent, I think what you're saying is correct. But Ramesh, the point that I think, as we are trying to get your advice for everyone out here and anyone who's watching this, there will be a certain section of people saying, yes, what Ramesh is saying is 100% correct. and you should buy good stocks, and you should buy them now or buy them whenever you can, hold on to them for a long period of time. But there are some people who will say, well, perhaps we should keep 30-40% of our money in cash right now, because you could have a crash in the market, so you could have a point where stocks are available at a really attractive price, and that's when we should jump in with both feet. That's what a certain viewpoint would be.
You may, you may not. I mean, one thing I've learned over 30 years in the market, Vikram, is that good news and good prices rarely go together. By the time you have stability, the prices will be significantly higher. So that's the chance you take. I think the way we try to address this is to look for great businesses that are willing to hold for substantial periods of time, run by able people, and volatility is just part of the course. Just like if you buy a house to live in, it doesn't really matter the neighborhood prices are fluctuating. Similarly with a great business, just because the stock market provides you with an active valuation of the business every minute or every day or every week, doesn't mean we have to act on that. We have to find that good business and stick to it. That's generally been the key to successful investing over the last 20, 30 years. As you know, I'm surely, as you know, and I want to make you re-aware, that the Sensex is compounded over 30 years at maybe 15, 16% without dividends. So it's a good place to park long-term money. And the way to get rich is not to time the market, but to spend time in the market, you know, festering those great businesses that your portfolio may hold.
You know something, anybody hearing this, just listen to that one piece of advice and it might well make the difference between financial security and non-financial security. How much time you spend in the market is really important. If you're a young person, the time to start investing in the market is now. You keep investing money, put it aside, systematic investment planning every single week. It'll eventually pay really good news, really well for you. So I think that's really sound advice. Okay, Ramesh, before you leave us, a couple of quick, now that we have you with us, you might as well get some quick investing tips from you. Who better to get it from than right from you. So if you have cash, I understand you're saying don't sell any stocks. You got cash, buy now or buy after 2-3 months. Do systematic investment. And buy large caps or buy small caps or buy mid caps. What would you do?
Vikram, that's an easy question. You always buy great businesses. If they happen to be in the small cap area, small cap, large cap, large cap, I'm agnostic to investing in them. If you want liquidity, if you want to be able to get out and snap of a finger, maybe large caps would be better. But if you want to make more substantial returns, sometimes finding those hidden gems in the small cap, mid caps is more attractive. Would you start investing now? I think the best time to invest was when the index broke 10,000. The second best time is now. I mean, it's very hard in my experience to time these things. So if you find a great business at a good valuation, I would ignore the huge macro headwinds going around. Will the Fed raise the rate? Will the NBFC problem be solved? How will the elections turn out? And instead focus on the business and spend some time evaluating the business and what the prospects the management is guiding for growth over the next 2-3 years. There are a lot of businesses that will weather the economic cycle pretty well. I'm very sure to tell you that.
All right, I mean, just hang on with us. I'm just going to quickly bash around and get everyone's sense of what you said. All right, the case for equity, eloquently expressed by perhaps one of the most respected voices, or one of the most respected voices that we certainly have in the stock market.
Correct.
Agree, disagree? Rajeev, let me get you in. I mean, you're a real estate person. Would you agree substantially with what he said?
I think I'll rest on his arguments. He's presented them so well that over a period of 30 years, there's been a great return, and so is it in real estate over the last 30 years. So I don't really know.
Okay, would you buy equity or no?
Well, you would always
spend... Once you bought your house, would you buy equity?
After that, yes. But the first thing is to provide you emotional and financial security in the short term and in the long term. You're not hoping to sell.
Sunil says buy stocks of something like Nestle and Britannia or Reliance or whatever it is, they'll give you emotional security too as they grow. Infosys, TCS.
Large caps that, yes.
There's some small caps that give you a lot of emotional security.
Well, why not? Why not? They're always good buys. But similarly, ticket size being small, you get houses for that and apartments for that. You can get a shop.
I was about to say you can buy stocks for 100 rupees.
Absolutely,
you can't necessarily buy a house. So if you're just starting off,
see the size of investment you've got to look at. So obviously somebody who's planning, this may be the right time to buy for them.
Sunil Alagh, your take on what Ramesh Damani said. I mean, you still saying keep your money in cash. Ramesh Damani says, man, you're never going to be able to time it correctly, so let's get in now.
When I said cash is king in volatile markets like this, I would advise keep your cash, Move in when you think. You'll never time the market perfectly, as people have said. But if you think, then put 20 rupees. If you got 100 rupees into equity at the right time, hold on to 80 rupees, move 30 rupees. But finally, investments is a separate thing from a necessity. That's what I mean. Now, if you don't have a house and you need one house, put it in now. That's a necessity. Nobody will argue with that. But if you want to hold on to your cash and move it around when the moment is right, according to you, you'll never strike it at the lowest. But if you don't have the cash, forget it. If you put all the money now into equity, you've had it. If you put it all into land, you've had it. So I'm saying this year, wait and use your money, but because you've got cash, you'll always be king. That's what I meant by cash, when cash is king.
Okay, Sunil, that's well put. Keep the cash and look, you know, Ramesh Damani said you'll never be able to time it. Perhaps Sunil says, well, keep some cash, do it systematically, which may be a possibility. Can I just come, Sudesh and Nasser, before I come back to you, you know, if you look at what some of the analysis there is, because frankly, everyone is looking at the elections. CLSA, for example, one of the most respected houses, and I tell you sometimes the analysis that they do is spot on. They've got 4 scenarios. This is one of the latest reports. They've got 4 scenarios. They say probability 1, Modi-led majority. So a majority for Narendra Modi. They're saying it's only a 10 to 15% possibility if the opposition unites in Uttar Pradesh. It's only a 10 to 15% probability. If this happens, positive for the market. Modi-led coalition. They are saying it's a 50 to 55% probability. It means that, well, you'll be more or less where you are right now. No major changes up or down. Congress-led strong coalition. 5 to 10% probability, and they're saying there could be a knee-jerk reaction, but it will be a good buying opportunity. Weak coalition is their 4th probability, which means anything can happen. No one knows who's running the government. It's completely hung, and the government's likely to fall, whoever's forming that government. That, they are saying, you know, could lead to a 10 to 20% market correction. Those were the 4 possibilities. And is that that's roughly what you were talking about?
Yeah, Vikram, I completely agree. Actually, you know, obviously, it's going to be very, very doubtful, the outcome of the result, because, you know, there are too many coalitions. You see multiple state level engagements. And also, I think the NDA number this time around 2019 is also questionable. Having said that, I think what's most important, Vikram, at the moment, since the topic is investments, and I'll stick to that, I think, you know, coming to each of the points that we heard right now, real estate, gents, ladies, I have a simple thing to say. It's, you know, real estate, if you buy, it has to be for 2 purposes. Either is it for investments or is it for end use. If you don't have a house now, you pick it up for end use, good advice. For investments, stay away completely. Number 2, I heard one of the panelists talk about...
Rajeev is shaking his head so violently. He's shaking his head so violently, it's going to fall off. So
okay. Number 2.
So both Sunil and he are saying if you don't have a house, buy it, but otherwise, why are you buying it for an investment?
If you buy it for an investment, if you have the money. He said the same thing, that yes, prices have come down compellingly, and this is a very fine price point. So, and what Ramesh also said, I mean, if you're giving a 30-year perspective, then don't even think about it, buy a house.
No, I'll tell you, Vikram, I have a view.
It's a 10-year window that if you buy a piece of real estate and an apartment, it's not for trading every day. It's a tradable paper eventually, yes. But it's also for something which is slightly medium term to long term. It's not a...
So I just have one counter to that, Vikram, which is that if you look at the rental yield concept, it's fairly simple. You know, if I have 10 crores, a crore, for example, and I put that in an FD, I get about sub 7% at the moment. Post-tax, I get about 3.5%, 4.5% post-tax. That's my net yield on the FD. Why would I invest real estate for investment purposes? Pick up a particular flat, for example, that has just been said, and get an yield of about 1.5%, 2%. Do you know what is the rental yield on residential properties in all metros at the moment? It'll be roughly about 1.5%, Vikram. So my point is, from an investment perspective, no, sir, but I'll tell you,
sir, if you look at which are more than that, right, in the stock market.
Yeah.
No.
Number 1. Number 2.
I mean, we've had an experience. I think why argue about it and why? I mean, okay, if you're leading on to a big fight, then we have to argue about it. But otherwise, everyone knows it. I think the way India has developed over the last 70 years, and right now there's some changes which are good. That we are now coming on to finished apartments. we are now coming on to a situation which
But
is
you
not
still
really
don't
in
get rental
shortage.
yield. He's right in
I'm
that.
talking about a
You
rental
cannot-
yield
Rental
concept
yield
here.
you don't get.
Of course you don't.
Okay, Sudesh, let me just ask you that. I told you some of the possibilities. Now we are trying to argue. I mean, when it comes to equity and somebody wishing to invest in equity, Ramesh had a view say you might as well get in right now. There's a certain Sunil Alag is saying keep some money in cash because you could have various probabilities, and Nasser I think is roughly saying the same thing. You saw the CLSA opportunities. Is that one of the reasons why you think even if you got cash, put it in bit by bit? So watch a little bit. Say what's more likely. Is the market going to? Is it going to be what CLSA calls weak coalition and therefore market falls? Is it going to be a majority so market goes up? You know, what do you feel?
Yeah, investment is never about external factors. I mean, market externalities are always going to be there. Just because the election is coming up does not mean that various goals that I have, it may be one's marriage, it may be the acquisition of a home, it may be retirement planning, it may be anything. So those things are not really going to change.
Okay.
So the first thing that I would say as far as a young person is concerned is that do not look at the markets at all, where the market is today. So start maybe investing on a regular basis. A lot of people may not be aware about how to invest in equities, and that is precisely why mutual funds are there. I mean, there are experienced fund managers who will be able to do the same thing for you. So choose wisely, choose appropriately, and invest in a few mutual funds. It cannot be all in equity, and that is a very, very important point for people. Though somebody may be say 25 or 30, it cannot be all in equity. So we will have to assess what kind of risk we are willing to take.
Okay.
It's not that all the young people have very, very low, very, very high risk profile. There are very conservative young people also. So they need to assess that, and accordingly they will have to put together a proper, mix of assets in their portfolio.
Okay.
So it can be equity.
Yeah, carry on.
Equity-oriented assets in terms of mutual fund. It can be certain debt-oriented funds in terms of, for example, debt-oriented funds. If they want to invest in fixed deposits, yeah, I mean the investment returns are going to be low, so we'll have to live with that. There are other products like perpetual bonds. There are other products which are available in the market like NCD.
Okay,
Etc.
fair
so
enough.
at various levels of risk.
Fair enough.
Yeah.
But
And
if I get, I'll just come to Suresh in a couple. So if I just give you some couple of really important takeaways from that. So if you're taking notes and figuring out how you want to retire prosperous and wealthy and good to go, so you've got some really important tips. Ramesh saying spend time in the market. Nasser was saying keep a diversified portfolio. That's also really important. And what you just heard, systematic investment planning. If you don't know what that is, research it, Google it, because you'll have heard this on exactly this show on The Big Fight every year for many years. Perhaps the single best advice that you can get. What that means is come in every month, put in a certain amount of money into a mutual fund. That's all you do. Then you don't have to worry about timing. You don't have to worry about who's winning the election. You don't have to worry about ups or downs. Put a certain bit inside it every single month. Do that for 10 years, 15 years or 20 years. You'll be prosperous. That's a simple point behind a systematic investment plan. Sunil, just wanted to ask you, systematic investment plans are all very fine. And when you're saying keep money in cash, you're partly, I think, referring to that. But I told you some of the scenarios, majority, coalitions, weak coalitions. If you're saying keep everything in cash, does that mean you think that we're heading for a weak coalition?
No, like I thought we were going to discuss investments for the coming year.
Yeah.
Everybody is talking about the same thing. If you asked in 2019 in November, I mean, there are some broad truths. You have to diversify. You have to put money all over. So if you don't change, I'm talking about the next 12 months only.
Okay.
Now, in the next 12 months, I am referring to whatever, and therefore, look, if you're going to take a general discussion, then I'm agreeing with everybody. Put money into property, put money here, we are talking about the next 12 months.
Okay, but for the next 12 months, if you're saying be in cash, are you expecting a weak government? Are you expecting a weak coalition?
No.
Are you on that line that you think that it's going to be a 10-20%
All I'm saying
crash?
is, can I just say one thing? Because there is so much speculation, the market could go up, the market go down. We could have a strong government, we could have a weak government. That is why I'm saying none of us can turn around and say we know how everything is going to work out. So stay in cash, let the cash be king. Wait till 19 May, June, when the government either stabilizes, doesn't stabilize. I might have a view on the government. That's the time when you start saying, okay, now for the next 4 to 5 years, I want to do X. But for the next 6 months, for God's sake, move your cash around. That's all I'm talking about in the next 6 to 12 months.
We are in a Goldilocks zone situation at the moment, both from a global perspective as far as India is concerned. We are not too hot, not too cold. I mean, we don't know which way we're going to go, frankly. And therefore, my only point is, Vikram, and I've been repeating this again, is that diversification is the key.
Nitin, let me just get you on that. When you're looking at the global scenario, it's actually been a really good period for the last 5 or 6 years, the Goldilocks zone, as Nasser just called it. One of the reasons why gold has also not really moved to that same extent. Sometimes gold and assets like gold perform the best when there's volatility,
pessimism.
When Donald Trump is threatening to nuke North Korea or vice versa, or there's going to be war with Iran and all of that things are happening, that's when gold sometimes tends to really take off. Is there anything that you're seeing which may point to that in the next year or 2 years?
Yes, because of this all reason, we are expecting gold is around $1,400 to $1,500 because it was $1,900. Now it is near about $1,200. Seeing the all scene of the across the world, the gold is a safe haven. So we are expecting the big rally in the gold, and that is around to 42,000 rupees, for 35,000 to 42,000 rupees per 10 gram. And above all, what I recommend is always keep the 50% your investment in the gold. 15% is a gold
Too
because
high.
Gold is a very easy to keep,
50.
sell.
Did you say 50%?
purchase
Did you say 50% as in 50 or 15% as in 15?
50. He said 50.
15%.
15%.
15.
Okay, 15%. Right. What would you say diversification?
Well, I think given risk-adjusted returns, 15% risk profiling looks fine. Looks fine to me for somebody who's wishes to diversify. Because again, in a diversification model, there's something called strategic and core allocations, Vikram.
So 15%.
And core allocations, in core allocations,
You would disagree strongly with 50%,
yeah,
but
50,
not with 15.
no way. But yeah,
Okay,
15,
fine.
I'll go with that.
Nitin, just hold on to that. Let me just try and get Ramesh Damani before you leave it. I'm just going to quickly try and get a couple of more questions in. Ramesh, on inequity, if you had to look at any individual sectors right now, which sectors would particularly appeal to you?
Sure, Vikram. We like the QSR space, the quick service restaurants. I think Indians will start eating out more as more women work in the house, as it is less convenient to have domestic help. So people will eat out. So the QSR space is fairly under-penetrated in India, so large areas of growth. I think liquor stocks and gaming stocks, the casino stocks will probably do well as both become social trends to watch out for. The other part, of course, is a lot of the stocks in the recent carnage, when the mid-cap stocks were down 30 to 50%. I think some gems in the dust are found there. So we should start looking at that. And that, of course, is sector agnostic. We just want to look at businesses that have been unfairly punished by being hammered down 30, 50%, despite the fact that they're single-digit PEs and maybe almost 5-6% dividend yields.
Okay, what's the worst case scenarios that we can think of? What's the downside risk? Should always have risk factors, right? When you're telling people to do something, what's the risk factor in doing exactly what each of you have suggested that people should do, right? So I'm going to look at that. Starting with you, Ramesh Damani, what do you think would be the biggest risk factor or the biggest worry for you when it comes to telling people they should be investing in equity right now? What's the most worrying thing?
I mean, the obvious problems, as you correctly pointed out, if oil prices again went up, if the Indian rupee depreciated, if the NBFC problem continues to get worse, as I think it probably will in the short run, I think those would be worrying factors. But that doesn't dissuade me from a basic advice that the job of an investor, the job of your money, is to find great businesses and invest in. I'll repeat the proverb that I've been taught when I was studying investing, that a ship is safest in the harbor, but it's designed to take on the high seas. So is a portfolio. It is very safe in a fixed deposit or in a bank account, but if you want to make a living, make wealth, grow rich, it needs to take on the high seas, needs to find good stocks, good businesses to invest in. So that is my best advice for this Samvat, Vikram.
Don't be in a safe harbor, go and sail into the ocean is what Ramesh Damani said. Ramesh Damani, thank you so much for joining us. It's really been good advice. Sunil Alag, from your point of view, the next few months, what would be the biggest risk in doing what you're suggesting, which is keeping money in cash? What's the biggest risk? Perhaps the fact that you could have a blowout rally and it will be too late to get in. Is that the biggest risk according to you in doing your strategy?
In fact, my strategy is the lowest possible risk of all the strategies that are being recommended right now, because if you are either in a liquid fund or something where in 3 days you can get your money back, you're earning some interest, you can yank it out, put it here, put it there, wherever whether you're timing it right or not becomes irrelevant. But this is the least. That's what the way I'm looking at it, because as a professional manager, I don't have too much money. Follow the path of least risk, and what I am suggesting is the least risk.
Okay. Nitin, what's the biggest risk about putting our money into gold right now?
You are asking me?
Yeah, I'm asking you the biggest risk in putting money into gold right now.
I
I'll
don't-
give you
I
one
don't
risk.
see any
What if the
risk in
Federal
that gold,
what if the
because gold is called as a safe
Federal
haven.
Reserve starts hiking interest rates further? Gold prices will fall.
Gold prices fall unless and until there is a very certainty in the across the world, or the rupee comes at the 50 rupees against dollar comes to 50 rupees, then there is a risk. But gold is called as a safe haven, so I don't see any risk in the investing in the gold. That is, I'm asking for the only 15%.
Okay. What's the biggest risk in buying real estate right now?
Real estate, if you go in for speculative buying, that yes, we're going in for projects which are launched on paper. I think the biggest asset is that we have a young population. They're looking out for long-term stability. And if they go in for completed homes, like Sunil said, that I'm coming here with a checkbook, that is, I think, the best proposition. You get a normal return, you get your security, you get an asset which also contributes to the national GDP, national employment. And I think what everyone has been saying is 15, 15, 15, that leaves a good 55% for a good long-term investment. It's obviously real estate.
But hang on.
Especially for women.
So
I've been making a point,
But hang
especially
on,
for young women.
a lot of people who've got their hands burnt in real estate.
Because of the fact that they went in for projects which were yet to be launched. So therefore, you have to go on the reputation, you have to see what you're buying, especially for young women, like Ramesh was saying. There's a young population which will go out to eat, which will get jobs. Women need the greatest financial and emotional security. They're not going to be out of a house if anything happens in the future, even in a relationship. What they need is a house of their own. Kick the bugger out if there's anything going wrong there.
Okay, that's one way of looking at it, I guess. Suresh, biggest risk factors around for you right now?
See, as financial advisors, what we suggest is look at everything long term and ensure that whatever is going to come up in the short term, you are taking care of that. So if there are some requirements in the next 2 years and you're anyway keeping that money with you, it doesn't really bother you whether the stock market is up or down.
That's it.
So my point is, I mean, one has to sensibly allocate assets across various asset classes. We suggest allocations into equity-oriented funds, debt-oriented funds, some amount of allocation in gold. We normally suggest 5 to 10%, up to 10% allocation in gold. Real estate, once all the bases are covered, real estate can probably come in with meaningful expectations of returns. I mean, we cannot really expect 20 and 30% kind of return, which happened during a particular period.
Nasser,
Biggest
risk factors.
Yeah, risk factors. I think, Vikram, clearly, as far as equity is concerned, because I'm talking about diversification. I said equity should be owned at the moment because it's a great buy. We're actually pretty much in the discount season. This Diwali, we're in discount season. We should have bought aggregated wealth by picking up good quality businesses. And that gives you an opportunity. But the biggest risk there is, of course, capital protection. I mean, how do you protect your capital? And that's why I said use diversification as a strategy to ensure that you minimize capital loss, right? Capital losses. The second point is, I think, with great risk comes great opportunity again, Vikram. And in my opinion, if it's a younger audience that we're addressing here, and in my opinion, I think it's very important to start small. And when you start small, you can actually get to the bigger target.
Okay.
And that's
start
more important.
small, start putting some money away
Absolutely.
every single week, every single month. Actually, by the way, I'm about to throw it over to the audience. Perhaps the single biggest risk, if you ask me, is not to think about these issues. Because a large number of people don't think about these issues. They don't figure out what are they doing, how are they saving, what are they going to do. You are 25 years old, retirement is 40 years away, who cares is the thought that comes to you. And then time keeps on passing by and you still haven't thought about it. By the time the requirement for cash comes, sometimes it is too late. So therefore, you've got to start thinking about it, right now. And that's what I hope this audience has done. So, any of you change your mind? Okay, why have you changed your mind?
सर मेरा सवाल एक आपसे है कि जैसे आपने कहा कि रियल स्टेट में इन्वेस्ट कर दो, बट मिडिल क्लास आप जैसे जानते हो कि बेसिक हमारी पॉपुलेशन अधिकतर मिडिल क्लास फैमिली से होती है. सो इन्वेस्टिंग अ ह्यूज अमाउंट ऑफ मनी इन मतलब रियल स्टेट में बहुत ज़्यादा पैसा लगाना, फिर ऑल ऑफ अ सडन कभी ऐसा होता है कि फाइनेंशियल लॉसेस होते हैं और फिर जब आपको ज़रूरत पड़ती है कि वो प्रॉपर्टी बेचो, वो सही अमाउंट आपको मिलता नहीं है. और रही बात, सर ने कहा कि डाइवर्सिफाई करना अपने इन्वेस्टमेंट को, तो सर बिकॉज आप इतना अमाउंट ऑफ इन्वेस्टमेंट कर देते हो रियल एस्टेट में, तो फिर हमारे पास कोई ऑप्शन नहीं बचता है.
Actually, you know something, that's an excellent question. Now, if you do what she says and put some money into a mutual fund, if you need it, you can sell small bits in it. If you put all your money into a house and sometimes taking a loan, are you over concentrated in one asset, Rajeev?
Well, actually, that's what is being answered here. That you are actually putting in what she said, small amounts into diversified portfolios, and you are actually taking a long-term loan. So you're taking a long-term loan which is perhaps 50% of your monthly savings and not more than that. क्योंकि अगर आप मध्य वर्ग के इंसान हैं तो ये ज़रूरी नहीं है कि आप सबसे महंगी ज़मीन खरीदें या प्रॉपर्टी खरीदें. आप अभी भी यंग हैं, जैसे विक्रम ने आपको कहा कि 40-45 वर्षों का आपका पर्सपेक्टिव है, और जो अभी जो स्कीम शुरू हुई है अफोर्डेबल हाउसिंग की, जो प्रधानमंत्री आवास योजना है, वहाँ पे छोटे घर दिए जा रहे हैं. जैसे बॉम्बे में लोग रहते हैं कि छोटे छोटे घरों में रहते हैं, आपको एक विशाल घर या फार्म खरीदने की ज़रूरत नहीं है, आपको छोटे घर में निवेश करना आवश्यक है.
So with the advancement in technology and all these complex financial instruments coming into equities, so what would you suggest me to do if I am entering into the market? Look for equities in a long-term perspective, or look for short-term capital gains?
I can give you a very simple answer.
It's a very
to that,
interesting
but
question.
do it.
No, but I'll tell you, I think clearly, as far as your equity portfolio is concerned, and if you have the risk ability, the appetite to go for it, I think you should look at businesses which are long-term. You have good earnings momentum, good balance sheet moats is very, very important, and also basic understanding of the business that you're investing in, right? Because that is when you will resonate with what the returns are expected out of that particular stock, right? Number two, I think what's more important is equity is not short-term, my friend. You have to understand this. Equity is long-term. When I say long-term, not as long as real estate. Pardon me for saying that, sir, but I'm stating a fact. Equity is minimum 36 to 60 months.
All right, so we've got lots and lots of really good pieces of advice and opinion. Thank you all so much for joining us, and thank you for once again helping to educate our audience. Key takeaways from this: start thinking about where you're investing your money. Start doing something about it from now. If you're earning 100 rupees, try to put aside 5 rupees or 10 rupees out of that, and you do it for a long enough period in any of the good assets that we've heard, as opposed to blowing it up. Eventually that money will stand you in good stead, because the power of compounding is massive. As 10 years goes to 20 years, as 20 years goes to 30 years, that small amount of savings you were making can really transform your life. And when it does it, remember you saw it first here. That's this special episode of The Big Fight. We'll be back next week. Bye for now.
Thank you.